Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 5th, 2025, and we're diving into the latest earnings report from Dine Brands Global, the parent company of Applebee's, IHOP, and Fuzzy's Taco Shop. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Dine Brands Global has just released their fourth quarter and full year 2024 results, and there's a lot to unpack, from their revenue performance to strategic initiatives for 2025.
Revenue and profitability overview. Let's start with the top line. Dine Brands reported total revenues of $204.8 million for the fourth quarter of 2024, slightly down from $206.3 million in the same quarter last year. John, what are the key factors behind this revenue performance?
The slight decline in revenue is primarily due to a decrease in franchise revenues, which resulted from negative comparable same-restaurant sales growth at both Applebee's and IHOP. However, this was partially offset by an increase in company restaurant sales due to the acquisition of 47 Applebee's restaurants in the fourth quarter.
And how did this impact their profitability?
Despite the revenue dip, Dine Brands reported an adjusted earnings per share of 87 cents, which is below the analysts' forecast of $1.35. The net income for the quarter was $5 million, significantly down from $32.3 million in the previous year, largely due to a prior year income tax benefit and increased closure and impairment charges.
Operational efficiencies and future outlook. Moving on to operational efficiencies, Dine Brands reported G&A expenses of $52.3 million for the quarter. How does this align with their strategic goals?
The increase in G&A expenses was mainly due to organization restructuring costs and higher depreciation expenses. However, Dine Brands has managed to generate strong free cash flow of $106.4 million for the year, which speaks to their financial stability and ability to invest in future growth.
What can we expect from Dine Brands in 2025?
For 2025, Dine Brands has set a conservative yet strategic guidance. They expect Applebee's and IHOP to have modest same-restaurant sales performance, with a focus on reinvesting in their brands and enhancing guest experiences. CEO John Peyton expressed confidence in their plan to elevate the guest experience and reinforce their value propositions.
Market reaction and strategic initiatives. John, how has the market reacted to this earnings report, especially considering the EPS miss?
The market reaction is likely to be negative due to the EPS miss, as the adjusted EPS of 87 cents fell short of the 135 forecast by analysts. This could put some pressure on the share price in the short term.
What strategic initiatives is Dine Brands focusing on to counteract these challenges?
Dine Brands is focusing on reinvesting in their brands and enhancing the guest experience. They announced a quarterly cash dividend of 51 cents per share, which reflects their commitment to returning value to shareholders. However, they anticipate a net reduction in franchise restaurants, which indicates a strategic consolidation to strengthen their core operations.
Key takeaways. In summary, Dine Brands Global has faced some challenges this quarter with a slight revenue decline and an EPS miss. However, their strong free cash flow and strategic focus on brand reinvestment and guest experience provide a solid foundation for future growth. John, any final thoughts?
Dine Brands is navigating a dynamic environment with a clear plan for 2025. While the EPS miss is a concern, their strategic initiatives and financial stability offer potential for long-term growth. Investors should keep an eye on their execution in the coming quarters.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Dine Brands' performance in the comments below.